Hi, everybody. This is Rob Booker, and this is the monthly FX Street Postcards from the Right Edge Support and Resistance webinar brought to you by FX Street, that website that is so awesome. And I'm excited to work with you today and talk to you about some things. There are some questions that came in before we started, and I want to begin the discussion by maybe just posting real quick posting a risk disclosure so I don't get into trouble for talking to you before I give the risk disclaimer. So let's do that first, and then we'll get on to some other stuff that you asked about. Risk disclaimer. Trading in the off-exchange retail foreign currency market is one of the riskiest forms of investment available in the financial markets and suitable for sophisticated individuals and institutions, although it's not possible for an institution to make a trade. It's got to be an individual all the time. So I don't know why they say institution. Imagine like a building. Be an institution? An individual can be in an institution. The possibility exists that you could sustain a substantial loss of funds, and therefore you should not invest money that you cannot afford to lose. Nothing in this presentation is a recommendation to buy or sell currencies, and Interbank FX, or FX Street for that matter, is not liable for any loss or damage, including without limitation, any loss of profit, which may arise directly or indirectly from the use of Interbank FX tools or reliance on such information. Okay. Someone asked, do I still do the radio show? Okay. I do. We're starting back the radio show in 2 weeks. It'll be a once-a-week, 2-hour radio show broadcast live, and it will be freaking awesome. Better than ever. So that's coming back. Number 2, someone asked if I work for Interbank FX. The answer is yes. I am the chief market strategist at Interbank FX. That means like I'm the chief prognosticator / economist market watcher dude. Nice to have you all here. Thanks for coming. Does anybody have money that they can afford to lose? Right. That is exactly right. Ray, that's brilliant. I always ask that. I'm glad you brought it up. All right, enough already with this stuff. You understand that trading is risky and all that stuff, and it's time that we get into some support and resistance stuff. I'm thrilled to have you all here. If there's a currency pair, why don't we just do this? Let's just start it off like this. Josh, what do you think about this? What do you want to look at? Anybody? Euro pound. Josh says euro pound. And let's look at that. Euro pound. Euro GBP. All right. It'll just take me a moment to pull up this chart. And you should be looking at a screen of my chart. And this is the euro pound. We're looking at the 1-hour chart right now, folks. And we're going to, we're looking at the 15-minute chart, but we're going to switch over to the 1-hour chart. Oscar from Austin, Texas cannot see the chart. All right. I'm going to describe it to you, Oscar. It's the white background, and it's got these candles, which are going up and down on the chart. All right, so now it really doesn't matter if you can see the chart or not. They've just described it so intimately that he feels like he's there. All right. Sorry, Oscar. Try starting .com again. Here's a trend line on the euro pound. Now, this is my favorite form of... Oh, yeah, when I talk too loud, see, I'm going to turn my microphone down a little bit so it doesn't distort as much. Because I don't want you guys to hear me yelling in your ear. That should be a little bit better if I speak louder. Okay. Yeah. Yeah, exactly. All right. Here's the euro pound. This is what I call an entry line. Ed, thanks for the comment about the distortion. I appreciate that. I want to be able to yell. This trend line is the basis for the start of my trade. We're on the 1-hour chart. This is the euro pound. Now, what I want to do is think about what am I going to do if this thing falls and closes below the trend line? What happens if this currency pair prints a bearish candle and part of the body of the bearish candle falls and closes and finishes below the blue entry line? Besides throwing an enormous party for all of my friends, just on the basis of a currency pair falling below a trend line. I want to think about profit target. Well, the first thing I'm going to do is go out to a longer term chart, like the 4-hour, and I'm going to draw another trend line. And I'm going to see if I get like, this is what I call a baseline, and it's my profit target in the event that this currency pair falls below the blue entry line. Now remember, nothing's guaranteed. Just because I'm planning this trade doesn't mean it's going to work out. But my basis for this opinion that I have is that a currency pair which falls below a level of support, which is basically an acknowledgement that sellers have taken control, that there's more selling pressure than there is buying pressure. I need a profit target and I need a stop loss. Well, my profit target is going to come from a longer term support level, and that's the green baseline. I call that a baseline. Most of you already know this. This is probably reviewed for everybody. That's the baseline. And my stop loss is going to go up above a recent high, so up in the 82.30 level area. That means that I have an entry, say around 81.20, profit target around 7,900. So that would be 220 pips, and a stop loss of approximately 110. That's a risk to reward ratio of about 1 pip of risk for 2 pips of profit. Sound good to you, Josh? All right. Now, the question here becomes, well, why am I so bearish on this currency pair? And I'm glad that you asked, Rob, because I asked myself. The answer is, I'm not necessarily more bearish than I am bullish. That's not necessarily the case. I want to be prepared to trade in either direction. I don't want to be exclusively limited to just trading in one direction or the other. So let's turn this whole thing around, and let's actually see how I might go about taking a buy trade. I'm going to color this line blue. Now this dashed line at 82.14 is blue. And I'm going to use this dashed line as the entry mechanism for a buy trade instead of a sell trade. I don't know if it's going to go up or down. I mean, anybody that tells you that they know that it's going to go up or down is absolutely insane. They're an institution. I am an institution. That is a tasty burger. They call it a Royale with cheese. We should find that quote and play that. Okay, so what we're looking at here is Euro Pound above 82.14. A close above that mark would be a demonstration to me of bullishness, and that the buyers are in more solid control than the sellers. Now, sellers at any time can try to take over and whatnot. What am I going to do for profit targets? Well, in the absence of a secondary trend line, like a baseline, in the absence of that, what I'm going to do is look for round numbers, pivot points, Fibonacci extensions, and the like. For example, in this one, I might just use 8,300 as the first profit target. So I'm just drawing this right now. So I might get in just above 82.14 if it closes above that mark. And I might put the stop loss actually below this blue entry line, which I'm now going to color red because it's going to represent a stop loss. And if the currency pair closes below that red trend line, then I would stop out of a trade. Now I'm going to have to compare my risk to reward before I take a trade like that. But essentially, that's the setup that I'm looking at right now. That's a bullish and a bearish scenario. Now, either one of those trades could stop out. Both of those trades could stop out. They could each open, turn around, and stop out. And that would be disappointing, but it wouldn't be completely out of the question. AB asks, what about drawing a channel and going for the top of it? Now, that, my friend, sound like John McCain. That, my friend, is a great idea. So I'm going to remove that, I'm going to remove that line, that line, that line, and we're going to draw, at the suggestion of my friend AB in London, good to see you there, we're going to draw a channel. And I'm not saying it's a perfect channel, but that That looks pretty reasonable. And that's an ascending channel. We don't see the full image. Oh, well, no problem. How's that? You see the full image now? Lady, you see me now? Let me know if you see the full image. Okay, I'll remember that. Thanks for the heads up. What we're looking at here is a channel. It's an ascending channel, which gives me a slightly bullish feeling about the trade, about the setup. And AB, I guess we could plan trades inside the channel, which would be more range bound. We can draw this trend line all over again, and if we sold, we could target the bottom of the channel as a profit target. That would be reasonable. So those are some ways to look at it as well. That's a euro pound. What's up?
Could you buy it off of that?
You could buy it off the bottom.
At the top of the channel?
Yeah, if it falls to the bottom of that channel and prints like a doji or a hammer or a pregnant fairy, bullish engulfing, angry boss, easy bake candle, whatever. Easy bake, Betty Crocker easy bake candle.
I think it's Betty Crocker.
I don't think it's Betty Crocker either. No, it's Betty Crocker easy bake ovens, right, people? Yeah. Let's take a poll. All right, someone wanted to look at the pound yen, so we'll look at the pound yen next. Here's the pound yen. This is the 60-minute chart. Let's go through the process all over again. I had a trade on this pair that didn't work out this morning. It was a buy trade that actually stopped out. But it starts the process all over again here. There's a blue entry line. This today cable on the 15-minute chart. Jack, be happy to look at that. Is everybody able to see the trend line I just drew? And this is the pound yen. This is the 1 hour chart. This is one of my favorite currency pairs, despite the fact that it moves a long way, really fast. Sometimes does us some pretty bad damage, but that's totally cool, right? It's all good. If it closes above this fairly steep trend line, I want to be thinking about buying it. Now, it doesn't mean that it has to go up once that takes place, but that's my signal that I'm more interested in buying than I am in selling. My stop loss is going to go below the recent low, so down in the 149s, 149.20 to 149.50, somewhere in there. And my profit target, just like we talked about before, is going to go on some longer-term level of resistance, what I call a baseline. We'll draw another line here. The trend line just drawn across the tops of these candles on a longer-term chart. There's a variety of places that this line could be drawn. There is no one place. There are some places that you might like better than me and I might like better than you, but that's baseline. The profit target up there at 156.92 or 157. So if we entered the trade around 151, 152 with the 450 pip profit target and 200 pip stop loss or so, that seems reasonable. Now remember, we're talking big numbers because this is the pound yen. Pound yen has much wider range than, say, your ordinary, average, typical currency pair like the euro dollar. This is going to move a lot farther. And a lot of people, I've noticed, have sort of shied away from trading this pair at all because the ranges are so wide, and they just say, well, forget it. I don't want to be a part of that. I don't want to get stopped out or messed up. And I understand. So you don't like this pair? Fine. That's cool. You do what suits you best. But I like this pair because once you're in a trade, it can really move fairly quickly in either direction, and you get some pretty instantaneous feedback. And if there's one thing I like in the currency market, it's getting feedback about the position that I'm in. Now, what about a bearish view? I mean, we looked at the bullish view here. What about the bearish view? Is there a way to consider a trade in the opposite direction? Well, sure. We'll do the same thing we did before, and we'll draw an entry line, a blue entry line, below the currency pair, below the lowest low that it's made just recently, down at 149.73. And we could do the same thing that we just did a moment ago. We could enter, the close below 149.73, profit target at approximately 148.01, That could be a first profit target. You could move your stop loss to break even at that point and target something much lower than that. If you're accustomed to working with pivot points or fib extensions, you could certainly do that. Let's look at an example of what a fib extension profit target would look like on this chart. So change some colors here so you can see it a little bit better. Okay, so we'd have a profit target maybe around 148.54, another more extensive profit target down at 145.78, and those could carry us, far enough to get a reasonable amount of profit. What about a stop loss on a trade like this? Well, stop loss could go, theoretically, it could go behind this trend line, just like we did before when we were looking at the, whatever it was that we looked at first. What was it?
Euro pound.
Euro pound. Yeah, that's what she said. Okay, so there you have the pound yen. Bullish and a bearish view on there. Balanced approach to that. Let's look at the pound dollar, and someone give me a suggestion for the next pair you'd like to look at. Pound dollar looks a heck of a lot like the pound yen just did. I mean, we're almost planning the exact same thing on this. So we do have a question, CVJ. Interestingly enough, Rob, as we work with the crosses, they really force one, or should you really be mindful and make sure your risk tolerance is first priority. So brilliant. What a great comment. There was a question about the 15-minute pound dollar, and here's table on the 15-minute. Really looks like it fell off a cliff. I mean, this thing really, really fell. So maybe draw a baseline here, draw a green baseline right here. Jeff, thanks for the comment. Happy to look at the euro yen. There's a baseline. Let's go down to the 5-minute on this pound dollar. Can we draw a trend line on the 5-minute to help us out here? Okay, so we could have an entry line on the 5-minute that looks like that. And a close above that entry line could be a buy trade with a profit target all the way up at the green baseline. Stop loss below these recent lows right here. AB asks, is it because of the crazy recent market that you take the two-way view of long and short positions? Exactly right. Yep. The nature of the markets recently has been so volatile that I feel kind of uncomfortable planning trades that aren't a little bit more balanced. So there you have it. That's exactly the reason that I do that. Why don't we look at a bearish view of the pound dollar? I mean, we'd pretty much be looking at exactly what we just saw on the pound yen. We'd be looking to sell on a close below the recent low. And we can use the 5-minute chart for that. Change this red line, which was our stop loss, to a blue line, becomes an entry line. Change our trend line to a red line. Goes from an entry mechanism to a stop loss mechanism. And if the currency pair falls, closes below the 1.5372 mark, then we might take a look at a sell trade. We can once again use extensions or pivots or whatever you feel most comfortable with. I don't know if an extension is going to work. We might run out of extension numbers here. We did. We ran out of extension numbers. We can go a little bit longer term and see what we can find. Yeah, it's going to be hard to find something really great using extensions. Maybe the first target could be, based on this Fibonacci extension, could be down at 1.5316. That could be a possibility. You could also use round numbers. You could just use 53 even as the first profit target, 52 even as the second profit target. Those would be adequate. That's a little bit more arbitrary because you're just using round numbers. I don't prefer that as much. I like something on the order. I like pivots. I like to use pivots or support or resistance levels on the pivot. I do like those. So that's certainly a possibility as well. Are there any ideas or considerations for what you'd like to look at next? Be happy to check out whatever you'd like to check out. Euro US dollar. Thanks. Fat. That's an interesting nickname. All right. Let's take a look at the euro dollar. Get off this 5-minute chart here. Go back to the 15-minute chart. Wow, this thing fell off a cliff this morning too. See if we could draw some type of baseline here. That could be the most recent baseline right here. This is a 15-minute chart. These are shorter term. Now this is an example of a trend line which is quite far away from the currency pair presently. We're not, close to it right now. We're about 100 points away from it on the 15-minute chart. So how would we enter a trade like this? Well, we could do what we just did on the pound dollar. We could go down to the 5-minute and we could draw ourselves a, this is a little bit low. Yeah, I don't really like this trend line. I don't like that. That's not my style. I need some more obvious points of turning around in order to get a trend line drawn. So we'll go back to the 15-minute chart here. In the absence of a trend line that I like, I could use maybe a fib retracement, maybe a close above 25.83. That's the 23% retracement of the move so far. And above that could be an entry with a stop loss down below the lowest lows that it made just recently. So that seems completely reasonable as far as the buy scenario is concerned. Now, if this pair goes lower than it is now, then we could adjust the Fibonacci retracement as it makes lower lows, and that readjusts the numbers. Now, what about a sell trade? Well, we could do we could turn this stop loss that we were just talking about, turn the stop loss line into a entry line, and do the same thing we were just talking about doing on the pound dollar and all of those others. An entry on the close below 25.17, stop loss above these recent highs, initial profit target. See, the initial round number is very close. So the next round number is down here at 2,400. And, we'd want to maybe move to break even after 20, 30, or 40 pips of profit. So that's kind of a balanced view on the euro dollar. AB asks, would you take a counter trend trade with a break above a fib level? Yeah, sure. Why you draw the fib from 27.98, not from 27.50? Why did I draw the fib? Because I felt like it. No particular reason. You could draw it differently. That's a great question. There's no reason why one is automatically better than the other. I just drew it from the beginning of that trend line that I drew. So, but not for any other reason. That was the only reason. All right, I'm just going to take like a 2-second break here and ask any of you that have ideas for what you want to look at next. Go ahead and type in what you want to look at next. I'm going to get a cracker. Can you see the euro yen? Oh, yeah, I promised to do the euro yen. All right, when I get right back, we'll do the euro yen. It'll only take me 10 seconds. All right, I'm back again. And are you able to hear me all right? All right. So back again. And still able to hear me all right? Just making sure here. Let's look at the euro yen. Gosh, don't all of these kind of look the same today? It's pretty amazing, but so many of these look exactly the same to me. It's like over and over and over again we're looking at similar setup on all of this stuff. Euro yen. I mean, it's gonna sound like a broken record, but so much of this is exactly the same. You got an obvious like peak right here, another peak right there. That'll be good enough for a trend line. I could extend it back even further, but I don't have to. And there's a baseline. And this is on the 15-minute chart. Everything looks like the Dow. What an interesting comment, isn't it? We'll go down to the 5-minute chart here. And we have a slightly more obvious peak right here that we could connect to these. You know, I don't love that trend line, and you can see why I don't. I mean, it's just sort of, it's already been broken kind of right here. It just doesn't look clean. I mean, I like to see a trend line drawn like I did on this 15-minute chart. The trend line drawn from one obvious peak to another obvious peak, often going from right to left, but sometimes going from left to right. I don't think it really makes a difference. In this instance, I just didn't see as much of that. I mean, we could draw something from here maybe upwards. Boy, that is ridiculously steep, though. And I just don't like that trend line. So I might go back to the whole idea of the fib retracement. So draw a fib retracement from left to right, and maybe a buy on a close above 123.12. That's the 38% retracement. Stop loss is going to have to be at least down here, if not further. And we're going to have to compare that with our profit target all the way up in the neighborhood of 124.77. So we're going to have to be careful about what we don't want to enter a trade that has a ridiculous risk to reward ratio. That looks pretty reasonable. If you put your stop loss all the way down below here, then the risk to reward ratio starts to look slightly less appealing. Richard says, do you ever examine correlation with dollar futures or with the other currencies? Yeah, from time to time. Red says, you want to go long? Red, I don't want to go long. I'm planning for the possibility of going long. So please don't confuse this with me saying that the euro yen is going up. Planning a trade is different than taking a trade. Now, if you're planning trades with a bias that you know that a currency is going to go up or down or whatever, you can get yourself into trouble. So I try to avoid that. I try to avoid having a bias, especially in the market lately, like that. Okay, here's the contingency for if the currency pair falls instead of rising. It closes below 121.83. That would be a bearish move, in my opinion. It would initiate a sell trade. Stop loss would go above this recent high, above 123.20. And we'd start looking at profit targets in the same way that we were looking at them before. Let's start with like fib extension, or even fib retrace. Here's the 4-hour chart, something a little bit longer term. And there's some fib levels. Go back down to I think we were on a 15-minute before we were. Here's some fib levels. Here's the 61.8 retracement of that 4-hour move. But one profit target's at 120.26. That looks reasonable. You could take some profit at that level, or we could move our stop to break even and keep the entire trade open. And then maybe we could try for something like the 100% retracement at 113.59. That would be a long move. That would be 600, 700 points. So that would be a big long move. And that's sort of the balanced approach. Remember, I mean, I don't really, not in these days anyway, I don't really want to plan just one kind of trade going in one kind of direction. I don't want to get stuck just thinking that the currency pair is going to go up, or just thinking that it's going to go down. All right, what are some, we had a request for the Euro Aussie. I don't have that on my charts here, so I won't be able to look at the Euro Aussie. Dollar CAD, though, I can certainly look at that. So why don't we break on over and look at the dollar CAD. All right, I had a buy trade on the dollar tag this morning, which is now closed. That was a break above the recent high. Just like we've been talking about today, these trades where a currency pair breaks above a high, it's a momentum style trade. That trade is over. Let's plan something a little bit different. I want to plan for the possibility that this falls. Wow. There's a possible entry line on the 15-minute chart. If the currency pair closes below that level. It's also a potential profit target, but let's just start here. Let's start with this. I got all these levels in here from all these different things we've looked at. Here is a possible profit target. So a 15-minute sell trade below this blue trend line with a profit target at the green baseline. Could we go even further? We could. Could we draw a trend line like, oh gosh, that's just ultra steep. That's why I call these steep lines. I'll color it red. And we could actually start the whole process off with a close below this red trend line. I call that a steep line. An initial profit target at the blue entry line. So that could kick off the entire process, and that's sort of a setup from start to finish. That's bearish on the dollar tag. Now, what about a bullish scenario? We look at the recent high, color our line blue because it's an entry line, and there we go. We have a possible entry on a close above 1.2098 or above, really above $1.21. You know, that's a round number, and I'm not a real big fan of trading on a buy above a round number. But, you know, I'm willing to consider it. Profit targets, once again, could be round numbers. They could be SIB retracements, and so forth. It's really up to you. I think an obvious, first starting point is this next round number at $1.22. I don't like this as much. I don't like trades that enter right around that round number like we're looking at here at $1.21. I don't like that. That doesn't appeal to me as much. So in this instance, and that's just psychological. It's not practical. I understand that it could still move as far as it wants to go. Boyke asks, are support and resistance and pivot points similar? Yeah, pivot points are just levels of support and resistance. Absolutely, yes. They are similar. Let's look at the Australian dollar, US dollar. All right. 60-minute chart. We could do something a little bit different. Let's see if we get a channel. Doesn't look that great. I was thinking we might get some really cool, impressive channel. I mean, that could be justifiably a channel. Channels are horizontal parallel levels of support and resistance that encase a section of price movement. There are several things we can do with a channel. In a descending channel like this, my real preference is for sell trade. In the instance like we have right now, where we're at the bottom of the channel, it's really not a convenient time to be selling. And as you can see, it's even formed this doji starlight candle at the very bottom of the channel. In these instances, you might be thinking of range-bound trading. So you might be thinking about a buy trade on a bullish engulfing candle, or a buy trade, for instance, on a Fibonacci retracement, like so. So maybe a close above 65.91. There's the round number area again, so I don't love that. But you might be thinking about that with the stop loss below the channel. What about a sell trade? I mean, where's the idea there? Well, we could plan a sell trade, for instance, using a trend line. Look, this isn't going to be great, but something like a rise up to this, I'm going to call it red, this red trend line on the inside of the channel. You might consider maybe if the currency pair rises up, hits that red trend line, and prints a bearish engulfing or some type of bearish candle pattern. You could think about it there. That would be completely reasonable. Absolutely. That's the Australian dollar, US dollar. Let's take a look at the dollar Swiss. Wow, these old trend lines from whatever we were just looking at are coming into play. So we're going to get a new chart altogether. All right, this is the dollar Swiss, 60 minutes. Looks like it's been rising pretty substantially. Maybe another occasion for which a channel makes sense. Yeah, that looks pretty good. Let's move down to the 15-minute chart. So we're on the opposite spectrum here. We're at the top of a channel. In this instance, it's an ascending channel. So the bias is typically for buy trades, but we're already at the top. So there's not a whole lot here that I see. Although we could consider, for example, if the currency pair falls and bounces off this trend line with a doji or a bullish engulfing candle pattern, that might be considered a buy trade in this ascending channel. If it fell all the way to the bottom of the channel and bounced up off the bottom of the channel with a doji or with a bullish engulfing pattern, that would also be a possibility. AB asks about pivot points, and I could probably do a separate webinar for FX Street about that sometime. But in the interest of keeping things pretty simple, I don't think I'll be doing that today. Anybody else have any other currency pairs you want to look at? That's the dollar Swiss. That's really an ascending channel in the buy perspective. For a sell perspective on this, we could take, for instance, ignore this channel, get rid of this trend line and start from scratch. We could draw something along the lines of this kind of a baseline here. This is going to be super long term. So a baseline there, this is a 15-minute chart. And then maybe, just like we've been looking at today on some of these other ones, go down to the 5-minute chart. And for the bearish view, consider moves below here. Now this is pretty short term, stop loss above these recent highs right here. This is the dollar Swiss chart. And let's look at one more, Euro CAD. Yeah, let's look at the Euro CAD, and then that'll take us into the home stretch here. Time seems to fly during these. Euro CAD 5-minute chart. Now we've looked at a lot of stuff today. We've had a pretty good grouping. Wow, this finally something that doesn't look exactly the same as all of the other charts we've looked at. Euro CAD. We've been looking at channel. I'm not sure I like anything I see right here. That's not good enough for me. Let's just let's draw ourselves a trend line here across the tops of the candle to start. An obvious area of reversal right there. So we've got this 15-minute chart. A close above that would be bullish for me. Or bullish for it, in my opinion. And we could look at a baseline for a profit target at this green line. Now, it's not looking like we have a really great risk-to-reward ratio, but we get over that. Yeah. That's not bad. I mean, the risk-to-reward's not going to be great, so I'd probably have to walk away from it, but it's not the worst thing I've ever seen in my life. Here, because stop loss is going to have to go down here. And as you can see, the stop loss is now wider. Can I maximize the chart? That's the maximization of the chart. If I do it too wide, people with smaller monitors won't be able to see it. So, Alex, you want to pull up a EuroCAD 15-minute chart, and if you want to sort of duplicate those trend lines, you might be able to see more on the larger monitor. I'm so sorry that I'm not able to make it too big here. Which part, Alex, did you want to see? Oh, you don't see the full chart. Oh, well, here. How's this? Is that better? Alex, I'm sorry that you couldn't see the whole chart. There you go. You should be able to see the whole chart now. Sorry about that, Alex. Thanks for the reminder. Appreciate it. Okay, that's the Euro CAD. That's the bullish scenario. The bearish scenario, as we start to wrap things up, colors this red line blue and uses this horizontal level as an entry mechanism with a profit target of perhaps these previous lows near the 5,000 mark. That seems totally reasonable. Or even a previous low here and a previous low here. So multiple previous lows to choose from, and all of a sudden my chart disappeared, and that must be a sign. Where did the charts go? Oh, they're over there somewhere. Yeah, gone, totally gone. Ah, there we are, back again. EuroCAD, 15-minute chart, sell perhaps below that 1.5093 mark on a close below that level. First profit target at a 150, second at 1.4966. Those are all previous lows. Initial stop loss would need to go above these recent highs at 52. So once again, we're looking at a fairly substantial stop loss. So you're going to want to make sure your profit target lines up all right. Yeah, you know, Abe, you're absolutely right. I mean, we're on the same page about where the stop loss would have to go in a trade like that. Folks, I've been thrilled to be here with you. Thanks for joining us on FX Street. My name's Rob Booker. This has been stupendous to spend time with you every month in the Support and Resistance webinar. I think we got to most of the charts that you wanted to look at, but if we didn't get at something, please join us next time and we'll try to continue this and look at it further. Thanks, Maud. Appreciate it. Good to see all of you. Blakey and Master and Elsie and Malwell and Riddler and Zool. There is no Dana, only Zool. Tom D, Maduro, Jeff, JM, Ray, Bill, Fat, Jose, Shep. All of you. Nice to see you all. Greg Mills, good to see you here. Oscar. So, thanks for being here. See you around, everybody. Do I have a website? Yeah, you can find me at a couple different places. You can find me actually just by typing my name into Google. Just type in Rob Booker. If you see some pictures, just remember I was young and I needed the money. Okay, see you later.